Hey, good morning, Cav. Good morning, everybody. Welcome to the Good Friday edition of Nexgen's classroom. Just a little FYI, guys, we're going to do some 101. That's what we're going to do. We're going to go through and do exactly what we do every day. The difference is there is no market today. There is no open markets, so I'm not even bringing up charts. So here's how this is going to work. If you have questions, you're going to have to present charts. I'm going to go through and we're going to talk a lot about the high probability trend trade today. And guys, this is a great day. This is a great opportunity for you guys that have questions about specific things. I know a lot of people don't like to put their questions in the classroom, and I don't want to ask them about this. He just talked about it. I'll go watch a video. Guys, this is the day. This is the day to be super vocal because it really is just going to be a question and answer for most of the day. Even when the markets aren't open, guys, I'm in a habit. And I trade, I've got systems and I've got routines. Good morning, Zorro. Good morning, Roku. And I check news every day. And there was still news today. There just weren't any markets to react to it. So every day I'm looking for high impact. Every day I'm looking for medium impact. And I want to make sure that I'm not throwing myself in front of these potentials for emotional reaction. That comes from forexfactory.com/calendar. I might, Gary. And I go there every day. That's not a bad idea. But here's the thing. I'm going to make you guys ask. I'm going to make you guys ask. Good morning, Rizwan. Everything that I'm going to talk about is from the education page, guys. And I'm gonna piggyback on what Gary just said. This is your software user guide straight from the education page. This is your NinjaTrader how-to. There's pretty much nothing regarding NinjaTrader that you can't find. Oh, hope you have a safe trip. How about if you trade without a plan instead of the proper education? Because the proper education's in place every day. The difference is you have to do something with it, right? I could hand every one of you a gun, and you could either protect yourself and your property, or you could shoot yourself in your foot. And it's not the gun's fault. It's your fault. What are you going to do with it? So you're going to get the proper education, guys. Straight from the software user guide, though, if you're curious about building new charts, turning off and on trade markers, the trade plot markers, there's your answer, right? Muting the chat room, screen capture programs, how to share in the room. Guys, this is a big deal. Closing Ninja workspaces, market replay. That's the one that Gary was just talking about. Guys, here's a video right here, 100% walk you through it. It's not a difficult process, but just like anything in the world, guys, you may have to practice it once or twice. You may have to do it a couple times before you're comfortable with it. Connecting to your Ninja account, moving and scaling charts, stops and targets. Guys, anything and everything that you need. If you're not in this classroom regarding NinjaTrader, it's right there for you. And most of it is really clearly spelled out. So yeah, Rob, if you want to go through and just start fresh, if you just want to get rid of everything that you have and start with fresh workspaces, there's a whole section dedicated to it. If you just need to build a new chart, there's a whole section dedicated to it. Guys, these are skills that are really pretty outstanding for you to learn in the beginning. So if we need to build a chart today, we'll build a chart today. I don't mind. I'll pull up my NinjaTrader. That's no problem. But we're going to get through 101 first. And then once we get through 101, we'll talk about it. The other section is the tutorial section. And the tutorial section is where all the answers are. There's zero secrets. I mean, zero secrets with us here at Nexgen. I don't want to keep secrets from you. My goal is that you're successful. My goal is that you're consistent. My goal is that you're confident. And I'm going to give you everything you need for me to reach my goal. And the cool byproduct of that is that you reach yours typically. So we're going to focus on really basics today, guys. And we're going to talk heavily about a high probability trade. And we're doing this for a reason. We're doing this because this high probability trend trade, guys, this is a trade where everything, each indicator on every chart agrees for the rules. Your triggers are going to be their strongest. No termination conditions exist. There's no trouble spots between your entries and your targets. And I focus on this rule heavily, guys, because this is the rule, or this is the trade that turns you into a chart reader. And I can't stress this enough. And I feel like maybe it's been under, I don't know, not enough importance put on it. Or maybe I'm just not saying it correctly. Once you're a chart reader, guys, life is amazing. Once you're a chart reader, you're going to understand so much. You're going to understand where the market is likely to continue. And that becomes an entry point for the high probability trend trade. These likely to continue spots, guys, this is where you're literally going to wait for the market to come so that you can enter it, so you can take advantage of this high probability trend trade. And that spot is recognized through chart reading. You're going to understand where the market is likely to go, and this is going to give you the opportunity to hold for bigger moves, to make more money, to be more aware of where exits should be taken. And again, it's the high probability trend trade that's going to give you the skill set to be able to read your indicators and understand where that spot is, and then where the market is likely to stop. If you know that you've just reached an area that may stop the market, if you know that you've just reached a line that could make that market 180, eventually you're going to build the trust to no longer trade into that area. You're going to know where it is. That's the first part. That's what we learned via the high probability trend trade. And then whether or not you have the discipline to not trade into it, that's going to be repetition from seeing it repeatedly and learning to trust it. And we're going to take these three concepts. We're going to take your chart reading, and we're going to whittle it down into trade entry precision, getting into the market where the market is most likely to continue, allowing you to reduce risk, allowing you to maximize profit potential. And you can't put one before the other, guys. These are in order for a reason. Your chart reading is what's going to get you into the market, to get you into a trade with a statistical advantage. Your great entry is what's going to allow you to manage that trade. And if you try to put this out of order, if you try to hit your goals before you learn how to reach your goals, it's going to be difficult. I made this picture today because I was feeling silly. Everybody has a starting point, guys, and 101 is that starting point. Learning to read your charts is your starting point. And no matter how much you want, you can't ride Space Mountain at Disney World if you don't take the time to get there. I'm a Novak man, and I'm horrible at analogies. But no matter how much you can't wait to eat cotton candy, or no matter how much you can't wait to see Mickey Mouse, is you have to take the time to get there, or you're never going to do it. And if you stop here in Shreveport, you're not going to ride the roller coaster. And if you only make it to Mobile, guys, you are not checking out Chip and Dale or whoever, right? So wanting to be on the roller coaster doesn't make it happen, guys. It's the stuff in between your starting point and your destination that's going to allow you to be a consistent trader. And you will take wrong turns. You're going to get lost. You're going to run out of gas. But the reality is you're still headed that direction. You're still headed towards your goals. So don't be in such a hurry to be at the end. I know that we all want to be profitable traders. I know everybody wants to be successful. Everybody wants to make that money. But it has nothing to do with your desire for money. It's going to have everything to do with your attention to detail, with your ability to recognize advantages so that you can capitalize on them. My job is to help you get there. My job is to give you the path of least resistance to get there, guys. And there is a step-by-step path to becoming a confident trader, ASAP. And it begins with posting your trades in class. Everything that you do, guys. This class is dedicated to turning you into a chart reader. So every time you post a trade and you tell me how you're reading the chart, it opens the door for a discussion to make sure that you're reading it accurately, to make sure that you're understanding the advantages, the concepts. The second part is using a spreadsheet, making sure that you use the spreadsheet Nexgen provided you. It's going to be your trade journal as you move forward. So when you present charts, share your read. Whoops. What is it that you're looking at, right? What are your indicators telling you? Because you may be reading it perfectly, and you also may be having a couple challenges. So if you tell me what you see, it's going to help us work through that. If you show me where you got in, maybe we can work together for better entries. Maybe we can find a way to reduce your risk. Maybe we can find a way to maximize your profit potential to keep you a little patient. Or maybe you did it so well. Hey, what's going on, Ben? It's good to see you, man. I hope the world is treating you right, my friend. And then, guys, showing me where you exited. Are you holding through so many problems that it creates challenges in your trading? Are you exiting early? Are you getting out too soon, too late? So the more information that you give me, hey, good morning, Elvis. The more information you give me, the better feedback you're going to get. So that's how you're going to do your charts. And then, man, I made these too big. Use the spreadsheet, your first tab on the spreadsheet that was provided by Nexgen. And I'll tell you what, I'll drop mine in the room right now. You can steal mine. I'm always happy to share it. And I've done a lot of work on this one for you. All you have to do is come back and study the previous day's trades, guys. All you have to do is come back and ask yourself what worked and what didn't work. Pour your coffee, sit down, take a few minutes, and a few moments with well-annotated charts will set you up for success on the day, guys, because you're going to start to recognize patterns that repeat themselves that are bringing you success, and you're going to recognize patterns or instances that maybe are robbing you of that success. It will lead to accelerated learning. It's going to keep you focused on the best of the best for the day. Absolutely. And then you're going to use the notes section here to record any feedback that you got from class. And that's going to be a big key concept. So Haji, are you using Capture software or are you using Snagit? Because guys, while I'm talking spreadsheets, let's go ahead and do a spreadsheet lesson. The first thing you have to do is take a picture, right? Let me bring up my spreadsheet. I'll bring up my Capture software. You're doing Snagit. We'll do it both. I know both of you guys are using Snagit. So guys, Snagit and Capture are the same tool. This one has bells and whistles. This one is free and basic. You have the basic free version. If I click the Capture button on my Capture software, all I have to do is click and drag whatever I want to see. It's going to ask me to take a picture, and I'll do that. And it's going to give me my image preview. And guys, this is how you and I have a conversation in the class. Each of these tools up top is click and drag. So if I take the highlighter and left click, I drag it wherever I want the highlighter to be. The same thing is true with the shapes, the same with the call out box, the same with the arrows. The call out box is how you and I talk. You talk to me here, not in the chat box. This is where you say, Mark, this was my read. This is what I saw. This is what I felt. This is what I was scared of. This is what I was excited about. And the more information you give me here, guys, the better conversation we're going to have in the classroom. If you just type on this, lost, shit, right? That doesn't do anything for me. What did you do? What did you do? How did you get there? Where do you find the spreadsheet? Cav, I just dropped it in the room, and I just dropped it in the room again. So if you look at the chat box, Cav, right here, you can download it, or you can even just click on it and drag it off to your desktop and put it on your desktop or put it in a folder, whatever you want to do. Guys, there's also a section in here where there is the trade tracking sheet. You can download it from the Nexgen website, but take mine. I've put a lot of extra work into mine for you guys. Steal it. I don't mind. And then once you have what you want, you're going to upload it, guys. Well, actually, to put it in the room, you can just hit copy. And then once you hit copy, it's going to put that picture on your clipboard, and you can Control V in the pop-out and drop the picture right into the room. And then once you click upload, what it does is it puts it to screencast. And screencast is nothing more than, man, it's a cloud where your stuff goes. So let me see if I can get to screencast on here. Oops, and that's going to be somebody's picture, I think. Oh, that's one of my pictures. Awesome. But once you go to screencast, I think I'm in here, is from your account, I don't know what all that is. Let's just save it and see what happens. Nope, I don't know. It's not going to my account. There we go. From your account, guys, everything that you upload is going to save to this account. Everything that you do. Mine reset when I got the new computer. But that's what going to the screencast and putting it up there. Now it's in the cloud forever for you guys, and you're good. And then if you want to put this into your spreadsheet, if this were the picture of a trade, you're going to copy the screencast link. Thanks, Ben. You know, that's always been it, right? If you just follow the plan works. Guys, it's the difference between being a baker and a chef. If you deviate on a baking recipe, everything goes wrong. But a chef is a little more willy-nilly. Great bakers make more money. So I'm going to copy this link. And then Haji, what you can do is you can drop it right into your spreadsheet. So if you just copy paste, it's going to put that into your spreadsheet. And it says app.screencast.com. And it's got all those letters and numbers. And it's not very specific to what's going on, right? It's just, I don't know what that is. So here is the second half of it. And Haji, if this is all you do, you're set, right? It's in there. You're good. But now let's go insert in the upper left-hand corner. And I'm going to click on link. And let's give you guys pictures again for this. So I'm going to use my Snagit. And I'm going to give you guys the full tutorial for you guys that don't like to take notes. So you're going to paste your link in a square. That's the first one. I'm going to put a 1 on it so that we know that that is number 1. And then number 2 is I'm going to click on the Insert tab. Even going to get these numbered for you. And then number 3 is I'm going to click on the link button. And Elvis, I record every day, brother. To set up a hyperlink. I don't know if hyperlink is hyphenated, but it feels like it should be. So that's number 3. So guys, pretty simple. Paste it in, click on link, go there. And then down here, we'll just do, oh, it's not going to let me, so paste the link in the address bar. That's number 4. Thanks for that, Ben. I really do appreciate it. I really do appreciate it, and I really do enjoy what I do. I hope you guys can see that. And I do believe anybody can do it. I firmly do. Type your description here. All right, guys, 5 steps. So let me give you guys the picture. And let me share that to Screencast as well. So you can put this picture into your spreadsheet. Seriously, Ben, I do appreciate that, man. It's great to hear, and it's awesome to see you guys doing well. One of my most amazing moments every day is watching you guys find success. Because I know that this works, right? But just human nature says don't trust. Don't trust Mark when he tells you that it works. Don't trust Mark when he says this is your path, because we're all so damn smart. But there's a way eventually you do, right? So guys, I just put the how-to, the 1 through 5 to get it into the spreadsheet there. So we pasted the link, we clicked on insert, we clicked on the link button, and then I'm going to take this link again, and just because I've changed it up a little bit, there we go. And then I'm just going to type in, we'll call it test. Click OK. And now it's in there. So Haji, that'll get you there. You guys that need that, that'll get you there. And I'm telling you guys, I can't stress this enough. If you spend 5 minutes every morning, let's see, this says strong trend trade. Let me click on the link. Oh, look at that. Everything was up and it was good, and I was patient, and I went in. And man, this is pretty cool, right? I can come back and do this. I can come back and do this. And then I look at my next one, and this was a loser, right? It was a long trade, and it lost, and it didn't really. This one actually won. But I say, what happened here? What happened in this loser that stole my success? And I spend 5 minutes with a cup of coffee doing this every morning. And what it does is it sets me up for the day. And I'm just like, man, I can no longer fight termination conditions. I can trade with that momentum. I can go back and see this. Look, and guys, this is your path. The path hasn't changed. Anyone that's been here more than a year will tell you that we've been saying this since the dawn of time with Nexgen. But everybody finds their path at their own pace. It begins with learning the trigger line and the Fibonacci rules for when it's okay to trade. That's the most important thing, guys. Rules provide a statistical advantage. Once you have that statistical advantage, you know in your heart, because you've trusted it, there's no distrust, there's no suspicion. Guys, the pattern wins more than it loses. If I take this trade 100 times, I have proven to myself that it wins more than it loses, guys. And that's what rules do for you. And that's why sticking to rules is so important. Simulate, practice, make mistakes, guys, but write on that chart every time, everything you do. Because you're not only celebrating the victories so that you can repeat them, but you're recognizing the challenges so that you can avoid them. Keep it simple. I say this every day. Keep it simple. Nexgen is the greatest software ever. I'm just going to say it, right? And it sounds arrogant and cocky. If you find something better, let me know. My big brother will buy it, and he'll give it to me. But the thing is, though, is this is the greatest hammer in the world. This is the gold-plated, served on a pillow hammer. But if you don't learn how to swing it, you're never going to build a house. So you have to take this software, you have to keep it simple and focused and learn how to read it. And then what you'll find is that there's a bajillion opportunities in the market. There's so many opportunities in the market. But if you can't find the easy ones, don't be so pretentious to think that you're going to find the more difficult ones. And we keep it simple with 2 charts. The high probability trend trade happens on 2 charts. And some of you have 3 charts and 4 charts, and Elvis had 173 charts at one point. And I don't know how he looked at them all, but he did. It was amazing. But for the new user, the large chart leads the way. The large chart is a broad stroke of a brush, and it really tells you what the market is thinking. This large chart is going to define the direction of the market. And if you just sit on your hands until you can go with the direction of the market, life is pretty easy. And then the large chart is going to define momentum. And the large chart is going to define areas, guys. And this all happens on the most current bar in the large chart. It's a broad stroke of a brush. I mean, it's literally the most current bar gives you all this information. Your first 2 rules for the high probability trend trade are met on the large chart. And then when they're met, we're going to refine that large chart. We're going to turn it into an entry chart on the small chart. And it's going to be a dissection, an X-ray, if you will. In this one bar that defines direction, momentum, and areas, you guys are going to be able to pinpoint where the market is most likely to continue on a smaller, faster chart. You're going to take this refinement process. It's going to allow you to reduce your risk. It is going to allow you to increase your profit potential, and that's where rule number 3 comes into play. So as a brand new user, keep it on 2 charts. I promise you're going to get to more charts. But one of the things that happens is new users begin adding charts because they saw Elvis with more charts. So they begin adding charts because they saw John Novak with more charts. They start adding trades because, well, if David B can make money on this trade, how come I'm not making money on this trade? Guys, you're not them. You haven't done the work that they've done. So keep it simple at first. 3 rules. That's it. 100% rules. There's only 3 of them for the brand new user. And each rule provides an advantage, guys. Rule number 1 says that your large chart, the one that leads the way, should have strong trigger lines. And strong trigger lines will give you the advantage of momentum, guys. And I'm going to tell you right now, momentum is amazing. Momentum breaks areas. Momentum carries the market. Momentum covers mistakes. If you're trading without momentum, you're already up against the wall. Rule number 2 says no termination conditions. Termination conditions are false, which means that you're not trading into one of those likely to stop areas that your chart reading allows you to recognize. And if you're not trading into termination conditions, the cool thing is you have room to your profit targets. There's room to make some money, and we call that a clear path. That's your second advantage. And then finally, entry is going to come on that smaller, faster chart, and it's very precise. You'll be amazed at how well you can predict where the market is most likely to continue, so much so that you're going to use limit orders to buy or sell a pullback at areas inside of trigger lines, and that's what gives you the advantage of entering where the market is most likely to continue. So 3 simple rules, guys. Give yourself 30, 60, 90 days to become so comfortable with these 3 rules that every time you speak to yourself, you're not saying, I think I have a long trade, or I think I have a short trade, or I hope this goes down. What you're saying is, man, I have momentum, a clear path in an entry area. I'm going to take that high probability trend trade. And then that works itself into you looking at your charts and saying, man, I don't have momentum, but the path is clear and I've got a great spot for entry. I'm going to take this trade. Or that termination condition just reversed the market. I'm going to look for an entry based off of my chart read, based off of the advantages that I see. But the first advantage, and the one that you really should never let go of, is let's look for strong trigger lines, guys. And the only way strong trigger lines can be is if they're going with the direction of the market. So let's define that real quick. If the background is green, the market's going up. That's like the most remedial way that we can say it. Green means up. And if the market's going up, it's totally cool for you to do nothing but look for rules to be met for high probability trend trades long, because that's where the highest advantage lies. If the background is red, the market's going down, you should only be looking for rules to be met for high probability trend trade short. And the great thing, and the color coding does a lot for you, because the only way to have strong trigger lines is if all the colors match. If your background is green, well then your small triggers, the faster of the 2 moving averages, must be green. And if the background is green and the small triggers are green, well then the large triggers have to be green as well. And if they're not, you don't have rule number 1 met. You don't have odds favorable momentum. For the brand new user, that means you don't have a trade, because your options have to be either the rules are met or they're not. For the experienced user, there's probably still a million opportunities out there, but until you understand this very basic concept, you don't know what the challenges are getting into the trade. So strong triggers means that your small triggers are above the large triggers, breaking away. I want you to think about scissors that have opened, and the only way that you can cut is when the scissors are open, right? You can't have closed scissors and expect it to go through paper. You're just taking a stab at it. So small's above the large, large or wide, both are angled in the direction of the trend, guys, and this means that the odds are favorable for the market to continue up. Odds favorable momentum is the battle cry here in this room. We see it every day. No matter what kind of trade people post in this room, when they have odds favorable momentum on every chart, it's difficult to lose. Going to the downside, when the background is red, the small triggers are red, the large triggers are red. There is space between the small and the large, and they're both wide and angled in the direction of the trend. Guys, this is a market where the odds are favorable for it to continue down. This is not a guarantee that it will continue down, but the odds are favorable. We're establishing a statistical advantage through our chart reads. And then that odds favorable momentum, guys, that's the best of the best. If it's down, you'll be able to pinpoint and sell Fibonacci resistance on a smaller, faster chart. If it's up, you'll be able to sell Fibonacci support on a smaller, faster chart. On the large chart, it looks like a tail. It looks like this weird looking wick. Nexgen users pinpoint right where the top of that tail is most likely to happen, or right where the bottom of this tail is most likely to happen with that odds favorable momentum. But momentum isn't constant, but the opportunities seem to be once you're a chart reader. Odds favorable momentum, brand new users, stick to it. This is the best. This is the best of the best for a market that's likely to continue. And then when small triggers work their way inside of the large triggers, you can visually see that the momentum is slowing. You can still take a short trade. Guys, you can do whatever you want, but you do it with the understanding that the momentum is going away. The market becomes less likely to continue in the direction of the trend, so it's important that your chart read tells you that the other charts agree. And then when the small triggers work their way inside of the large triggers, you have a weakening or a slowing of the trend. Anything can happen, all caps. Anything can happen up or down, guys. This is what you're going to hear in class. You can still take a short trade, right? But you're going to have to manage it aggressively. You better be a chart reader if you're not trading with the advantage of momentum, because you may have to get out of that trade really quickly because anything can happen. And I don't know about you guys, I don't like risking my money when anything can happen. I prefer to put it out there when the odds are favorable. And then when you get those weak triggers, guys, and you hit an area, those areas that you're going to be able to define, this is where the market bounces. This is where it stops. This is where you get untradeable bounces. This is where there's fights between buyers and sellers. So you can use the same concept of momentum to understand when the market may have hit an area where it's not going to continue through. And that's rule number 2, and that's also on the large chart. But before I do it, is everybody cool with the idea? And we're going to slow roll it today, guys. We got nothing but time because there's no live market. Is everybody okay with the idea that odds favorable momentum, guys, this is where we're looking to buy Fibonacci support. Hey, TLC. Anything can happen, may precede a reversal. Anything can happen, may create a further pushback. Odds favorable doesn't last forever, guys. It may turn into anything can happen. And there's your reversal. But from the reversal, once again, odds favorable. We're looking to sell Fibonacci resistance. And then I want to share this picture. Notice that the colors don't match. It doesn't mean that there's not opportunities in there for the chart reader, but what it means for the new user is when your large triggers are down and your small triggers are up, you are void of odds favorable momentum. When the background is green and the triggers are red, you do not have the advantage of momentum. And guys, this is where the buyers and sellers are fighting. You see it a lot of times between Fibonacci areas. You see it in between mid bands and Fibonacci areas. And this is a transition. This is where they're trying to figure things out. We don't have to get caught in their fight, guys. And I see this all the time. This is where people, hey, Ivan, welcome to the room. This is where people blow out accounts, guys. This is where people form opinions, try to predict what the market's going to do, rather than simply allowing the forces in charge to reestablish that odds favorable momentum. If you really adhere to your rules, there's no reason to ever be caught in one of those scenarios. So rule number 1 happens on the large chart. Large chart, and you can see it on the most current bar, it's going up. You can also see it on the most current bar that I do in fact have odds favorable momentum. So now what I need to do is I need to start looking for rule number 2. And rule number 2 says that termination conditions are false, that room to profit targets are true, that I want to have a clear path. And a termination condition is really pretty easy, guys. It's a Fibonacci-based indicator that may reverse the market. And may is a different color. May is underlined because all we're doing is trading patterns that repeat themselves more often than they don't. So we're going to understand if they may reverse the market, and we're also going to understand if they have the potential to break or if they've already broken with a comparison of the Fibonacci area and the T3 trigger strength and location. The areas that we're looking for on a large chart, the areas that you're going to know about long before the market gets to them. Blue Fibonacci support and red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence low lines and magenta divergence high lines. Any third divergence in the same area means that rule number 2 has not been met. And then there's also going to be a scenario where your large chart midband can even behave as a termination condition. And we're going to use that comparison on the triggers to see. So to determine a termination condition, that's hard to say. The first thing that has to happen is price reaches an area. Price bars, in this case, reach Fibonacci support. What does that mean? That means that price has been pushed all the way to a key area. And then a key area is where decisions are being made. A key area is where the buyers may buy and the sellers may sell. It may be where profits are being taken. And honestly, it may be where the opposing forces are going to end up in a giant fight. So if price reaches Fibonacci support and the trigger lines remain above, the easiest, most conservative, safest way is to do absolutely nothing and wait for the reaction. The area is not broken, and this is a termination condition. And an area is not considered broken until both the small and the large get to the other side of it. So areas break all the time, typically with odds favorable momentum, but we don't consider the path clear until the small and the large get to the other side of the area. So support begins to behave as resistance. All that momentum had broken it, the triggers are through, there's space between the two, and each and every one of you just pinpointed where that tail was likely to form, guys, and that becomes your entry for the highest probability trend trade because the path is clear. We haven't reached the next key area. The recipe never changes. If price reaches the area and the triggers are below, it's a termination. TLC, you have a random question just you can answer. And NASDAQ, where is your stop and first take profit? You know, on CL, it's placed 5 ticks above your box. It's the same. It's the same, TLC. Put the stop where the market shouldn't go, right? But the thing is the NASDAQ trades in $5 increments, which means that your stop may be 24 ticks, not 12. But where the stop shouldn't go, it doesn't matter. I don't care if it's NASDAQ or Tesla or Apple, whether it's soybeans or gold. Your stops go where the market shouldn't go. Your ability to read your charts and pinpoint your entry gives you the very distinct advantage of knowing where that is. So we'll talk about stop placement a little later on. I don't want to get ahead of entries, but I am recording this, and you will be able to watch it later if you want. Pay attention to the stop placement. But I can tell you that the Sunday school answer is simply where the market shouldn't go. And that's where that refinement chart comes in. That's where the refinement process on the smaller chart comes in, is you're going to pinpoint your continuation spot, which means that you'll be able to pinpoint where it shouldn't go. And the thing is the same, 5 or 6 ticks above the box. But the thing with NASDAQ TLC, and let me say this real quick for everybody listening, NASDAQ is not crude oil. NASDAQ is not the S&P. NASDAQ moves so fast and aggressively that the time frames have been bumped up dramatically. And if you're not good at recognizing patterns on a slow-moving market, NASDAQ's just going to chew you up, spit you out, leave you in the gutter, and really not even look back as you lie there bleeding. Trust me on this one. So there's a lot of nuance to the NASDAQ. Practice NASDAQ on market replay. And stop placements require great entries. And I'll tell you right now, great entries on a trend trade on the NASDAQ are different than great entries on crude oil, the S&P. So learn the best. It's the easiest. I never say that crude oil is best, but it's a slower moving market, Miraboy, which means that you have more time to process your rules. You have more time to make sure that they're met. Crude oil, S&P are less likely to overrun areas dramatically. Sorry to hear that, TLC. You know that you can have a backup, right? Like, I never trade the NASDAQ without having my trade evade open. I never trade anything without having my trade evade open, so that if something happens on that chart, I can close it instantly online. It's a good practice to get into. So let's get back to termination conditions, guys. You hit all of them, just didn't work. I would call your broker and see what happened. And guys, sometimes we are in a digital age. Sometimes the digital age wins. So give me a why in the room, please, ladies and gentlemen. Price reaches Fibonacci resistance. The triggers remain below. Let's just say no long trades, right? The path isn't clear. It really is that simple. Price pulls all the way back to Fibonacci support. The triggers remain above. The path isn't clear. There's no reason to take a short trade, guys. There's no reason to hope this area breaks, even from a strong top, even from a termination that reverses the market. If you reach a termination condition, they are under no obligation to not make that thing bounce. And I want you to see this phenomenon right here. Those large triggers, when price reaches support, when it gets to that midband area, they are a full bar away. We call this the gap theory. The gap theory says that if price accelerates away from the large triggers and runs into an area, whether it's a midband, whether it is a fib, whether it's a 1-to-1, and those large triggers don't follow, it's likely to suck right back up to them, which means that if you tried the short, you probably get run over 2-3 times, all the way up to those synthetics. And then you have to make a decision. So price reaches, no triggers, no trade. Price reaches, no triggers, no trade. Price reaches, no triggers, no trade. Egads and little fishes, guys. How are you ever going to make money if this market gets caught between fibs? How are you ever going to make money if your rules aren't met? Well, you're not 90% of the time. But not taking a trade when the rules aren't met sets you up for success. And I want you to see this. We reach resistance and the triggers are below. That's a termination. We reach the divergence high line. This divergence means there was a loss of momentum all the way back here. Has nothing to do with anything other than a loss of momentum. But when price reaches the area, the recipe for a termination condition, this divergence line becomes a termination condition as well. When price trades above it and back below it, Rhythmic and Tradevate Roku are data services provided by Apex so that you can trade one of those prop firms. When price trades above a divergence high and back below, this is what we call a pivot stop out of a divergence high. This is not a termination condition, but when price reaches it and triggers remain below, it is. When price trades above it and back below it, it's still just a termination condition, but we call it a pivot stop out. This is such a big visual. Don't take that trade long because pivot stop outs can stop the market. Resistance with the triggers below can stop the market. So when these two are right on top of each other, it adds strength to the top. But check it out. Can't go long. I'll say shouldn't go long, shouldn't go short, shouldn't go long. But wait, this termination, it reverses the market just like it did here. But the difference is it gives me odds favorable momentum and a clear path. Rule 1 and 2 are met, and that's where you guys are pinpointing an entry. So not giving up $300, $400, $500 when the rules aren't met creates this huge advantage and allows you to really capitalize on the best of the best when the rules are met. And that's one of the biggest challenges new users have is the patience of waiting for it to be perfect. Guys, the whole goal of trading is to get paid. The whole goal isn't to be active. Most trades doesn't win. So Cav, let's go back again, and you're going to see this a lot. Large chart midband if the large triggers are a full bar away. Large chart midband if the triggers are a full bar away. If I reach the midband and the large triggers are a full bar away, the midband is a termination condition, even without the fib there, Cav. But if I get to the midband and the large triggers are not a full bar away, well, then that's just a green line on a chart, and I'm not so worried about it. And that is the general. This is when the midband behaves as a termination condition. Does that make sense? Because that's an important part of what I'm saying. And then as you grow with the software, guys, and you become a chart reader, what you're going to find is that the midband can still be problematic, but you have to incorporate a lot of other chart reads into it. So for the brand new user, if price reaches the midband and the large triggers are a full bar away, it is a termination condition. And if it is a termination condition, rule number 2 isn't met. And if rule number 2 isn't met, well, then your best course of action is to sit on your hands and be a little bit patient. Wait for the market to give you momentum, a clear path at an entry area before you try to enter. Once again, 90% of your day is spent reading indicators, guys. And when price goes headfirst into these yellow 1-to-1s and the trigger lines remain above, all you have to do is say, hey, you know what? I'm not going to take a short trade into that area. I don't know if it's going to break. I don't know if it's going to reverse the market. I don't have any idea if they're going to dance around for the next 3 days and try and figure out who gets to win, the buyers and sellers. I'm not the guy in charge of that. I'm not the guy that moves the market. I'm not the guy that establishes momentum. Let's do this. It's this guy. Guys, this is the big money investor. This is the guy with the power to create trends and momentum. This is the guy that reacts to those key areas. I want you to get the mindset. Your best bet is to be a remora. When he goes in for the kill, hang back. You're going to get your piece of it. The guy that tries to be first gets eaten. And I see this a lot. Price reaches a termination condition and people get anxious. Man, I've got to go long. I've got to go long right here because it may stop the market, and that means that I'm going to get rich going the other direction. If you did it here, you lost. If you did it here, you lost. If you did it here, you lost. So what you can do, hey, good morning, or good afternoon, Jen, excuse me, is just submit to the fact that you don't know, that you're not sure. And it's okay to not be sure, right? We don't have to know everything. But what I do know is that if price reaches an area and the triggers remain above, it's more advantageous for me to sit on my hands and wait for the people in charge to fight it out. And look what they do. Untradeable bounce directly into resistance and the triggers remain below. I've got termination conditions both directions. And then this thing rattles in between the two. The trigger colors don't match each other, the background. None of my rules are met for almost 45 minutes, guys. And this is the 90%. Let's take a picture of the picture. Let's drag this class out today. And let's go hot pink because I missed the 80s today. That's a termination condition. Don't go short. Price reaches resistance. The triggers are below. Don't go long. The colors don't match. You don't have momentum. Don't go long, don't go long, don't go short. Check it out. Here it is right here, Cab. There's that mid band, and the large triggers are a full bar away. Son of a gun, how many times are they going to fight? But eventually, smalls and large get above resistance. It begins to behave as support. My path is clear. My smalls are outside of the large, and I have momentum. And there it is, guys. I watch traders every day give up $1,000 here, blow out accounts here, lose money. And if they manage to stay in the fight, maybe they make $400 here, right? And the reality is all of your fighting, all of your opinions, all of your impatience, not waiting for the advantages, you're still down $600. And guys, this is where you start to get discouraged. And this is where you start to make bad decisions. Oh, I lost 1,000 and I only made 400. Let me trade into the termination condition that's about to reverse the market. I don't have momentum, but I'm down money. Let me take this trade and hope that it works because I really need to recover that money. But what if all you had to do is learn how to not take the wrong trades, to not give away your statistical advantage? Elvis, I had a hot pink room in the 80s. So guys, 90% of your day is reading your indicators, waiting for advantages. 10% of your day is taking advantage of them, jumping on them, taking that trade, building the trust. I am in your head, Jen, and it's a scary place to be. No, it's everybody's head, though. That's the beauty of it, is you guys think that it's just you that has trouble following rules. It's everybody. You guys think it's just you that breaks rule number one. It's everybody. At some point, everybody does it. But I'm telling you right now, if you drop it in the room and you allow us to have a discussion about it, we can fix it. We can pull that out of there. Yeah, hot pink for a boy, Elvis. I'm 6 feet tall, 200 pounds, and covered in tattoos. Are you going to talk to me about hot pink and tell me that it emasculates me? Hell no. I'm just secure. Guys, there's one other termination that we're going to talk about. And I want to put this out there because the large chart is going to define your areas. The large chart is going to define where decisions are being made. The large chart is going to show you these lines that may be problematic. The recipe lets you know whether they're going to stop it, have the potential to break, or they've broken. But three divergences on any chart. Three losses of momentum on any chart may terminate the trend. But you'll see it first on your small chart, your faster chart, your refinement chart. Three divergences may, there's that word again, may reverse the trend. Three divergences with anything can happen triggers is a more powerful look. Three divergences with anything can happen triggers and the third pivot higher than the previous or lower than the previous. Guys, this is your management opportunity. Get the hell out. If you're in, this is your ability to say, hey, guess what? Rule number 2 isn't met. I'm not gonna hope that last trade works. One of the things about Nexgen, and I'm going to tell you right now, one of the things about Nexgen, and people don't realize this until they're a few months in, is that we become so freaking good at reading charts that we don't have to take unnecessary risks. We don't have to hope that areas break. We don't have to wish that the market would continue. Our indicators tell us all that. We just have to learn to trust it. And that's the thing, is you've got to take time to learn to trust it. Cab, waiting is the trader's downfall? Absolutely. Guys, you're not traders, you're professional waiters. Walk away. I sketch. I've got sketchbooks on my desktop. I play solitaire. And you will watch the market and fabricate a trade if it's been too long in between trades. But three divergences can stop it. Three divergences can kill it. And guys, it's going to help you identify using the small chart when the large chart may be turning directions. That's it. So three divergences says rule number 2 is not met. If you're in a trade, three divergences says manage out. We saw a trade yesterday where the large chart was screaming and the large chart had momentum and the large chart was going, but it didn't have a clear path. It didn't have a clear path, but a decision was made to take the trade anyway. And then multiple divergences printed on the small chart, and the decision was made to hold the trade anyway. And that trade went against the trader $1,700 because there wasn't an exit plan. There wasn't a way for them to understand yet through chart reading when it was time to get out. And ultimately, the rules got met both directions, and they got out of the trade break even, thank goodness. But guys, you're better than that now. Once you understand direction, you can choose to trade with it. And then once you can establish momentum, you can choose to trade with it. And then once you have a clear path, you can choose to trade with it. And if you do that, it gets pretty easy, guys. We just go to the small chart and we refine it. We take that broad stroke of a brush and we refine it down to the point where the market is most likely to continue. And we do that with rule number 3, guys. Lines on the large chart can ruin your day. Lines on the small chart are areas to enter. So you're going to wait with a limit order, guys, to buy or sell a pullback at an area inside of triggers. That's it. I am going to use a limit order to buy or sell a pullback at an area inside of triggers. And let me show you why we use the refinement chart. Because the large chart says up. That's what the large crowd wants to have happen. The large crowd created momentum that I don't want to fight. And the large crowd hasn't reached any areas. So there's no reason for them to even stop or look for a fight. There's always these yahoos that want to fight it. I've got to be the first one in case it goes down. I've got to fight everything because what if, right? What if my well-established proven rules are wrong? I better hurry up and go down. And then what happens is they give this little shove. And guys, this little shove is what Nexgen users rely on because that little shove is the pullback to an area inside of favorable large triggers. And let's define favorable large triggers before we go and look at the entries. Favorable large triggers means that on your small chart, your large triggers, the smooth large triggers, and the synthetic triggers, the stepped large triggers, are one on top of the other. Let me make this huge for you. One on top of the other, like snakes riding piggyback. Guys, triggers are the correction point. Triggers are where price is likely to come back to. So the tighter those triggers are on top of each other, the smaller your correction point. And then, of course, there's the opposite side to everything, right? Strong, weak, good, bad. If you don't have them one on top of the other, well, then your correction points become splayed out. The distance between them becomes larger, the risk becomes greater, and the indecision becomes heavier. So as a brand new user, let it be perfect. Let it be favorable large triggers. Let it be one on top of the other because our rules are good enough to have you understanding where the market is likely to continue. And it's likely to continue at a bounce point inside of those triggers. The triggers are where we expect the market to go. The areas inside are what we expect it to bounce off of. So when everything is up, you guys are going to have the ability to buy low, to identify Fibonacci support inside of triggers and get into that market with the least amount of risk and the greatest profit potential. And when everything says down, you're going to be able to sell high at Fibonacci resistance inside of favorable large triggers on a smaller, faster chart, and hopefully ride that wave of momentum all the way down to the next key area. And we do this because of the refinement process, guys. Because of the refinement process. 1 bar on the large chart. Notice the black box around the 1 bar on the large chart. It's 15 to 30 buys on the 15 to 30 bars on the small chart. And guys, this allows you to take that large picture, that broad stroke of a brush. This allows you to refine it. The bottom of the most current bar should be the beginning of your pullback. That wick or that tail should be an area of resistance inside of favorable large triggers. On the large chart, it just looks like 1 bar and everything going down. On the small chart, it's about 15 to 30. You see the fluctuations, you see the range. And this is how we're going to be able to pinpoint, guys. And there's things on the small chart that I don't want you to worry about. If divergence prints, who cares? Momentum is established on the large chart. If the small triggers turn against you, fantastic. That's what we need to get back to our area of resistance. Remember that the large chart leads the way, but on the small chart, it's going to look like this at entry time, guys. On the small chart, the reversal bar begins the pullback. The reversal bar begins the fight from the small crowd. Your job is to find the trigger lines. The trigger lines are where the market is most likely to correct. The trigger lines, the tighter they are, the smaller the correction point. But guys, trigger lines are like clouds. They don't stop airplanes, right? Clouds don't stop airplanes. They go right through it. But if you hide a skyscraper in that cloud, it's probably going to stop the airplane. These areas behave as a bounce point. It's like a brick wall you're throwing a tennis ball. So the reversal bar prints, and I look for my triggers. And then once I identify my triggers, I look for the areas. And then the areas are where my window of opportunity, where the market is most likely to continue. And my job is to activate a limit order right at the top of that window to wait for the small crowd to do their thing. So, Jen, on the small chart, 1 divergence doesn't scare me. Hopefully that gets me back. 2 divergences, well, you're going to have to do a little bit of chart reading. If my second divergence is higher, I couldn't care less. If my second divergence is lower, for me, that becomes an exit condition. And then 3 divergences, and I think this is the key that you have to remember. 3 divergences on the small chart is when my rule isn't met anymore. 3 divergences is when I no longer have a clear path. 3 divergences is enough that may reverse the market. So there's a difference between rule number 2 not being met, don't take a trade, and a management tool based on the divergences. Does that make sense? And I'll go further with management, and we'll look at how divergences can affect a trade. But right now, guys, all we're doing is letting the large chart lead the way. We're saying strong triggers. We're saying clear path. And we're waiting for the small crowd to do their thing. We wait for the reversal bar. The reversal bar is not your entry signal. And then, Jen, there it is right there. That 1 divergence is not a termination condition. It's just a loss of momentum. So once the reversal bar prints, I'm looking for my trigger lines. I'm looking for my correction point. Where's price likely to go back to, guys? It's likely to go somewhere from the bottom of these triggers to the top of these triggers. But I don't know where, and to be honest with you guys, that's 20 ticks. That's $200 worth of a range. I'm not risking $200. Don't feel like it. Don't want to. Not per contract. And it's actually more like $250. So I identify my triggers, and then I say, you know what? Let's refine the process. Let's find the areas inside. Let's find those solid bounce points inside of the correction area. I'm looking for fibs, mid-bands, yellow 1-to-1s. And once I have them, from this Fibonacci resistance to that Fibonacci resistance, from this fib to that midband, this shaded area represents the point where the market is most likely to continue. This is my window of opportunity. And you'll notice that this fib up here is way beyond the correction point. That's not part of my window. These 1-to-1s are way beyond the correction point. That's not a part of my window. And guys, I see a lot of people trading areas from the wrong side of these triggers. You're beyond the correction point, and your advantage goes down dramatically when you do. But the cool thing is that we can take from this one bar where it's likely to correct, where it's likely to continue, and you can just activate a limit order at the bottom of the window, because remember, the large chart is screaming to the downside with nothing in the way. We don't expect the small crowd to get that far. But the cool thing is if they do, well, now you're in a short trade, ladies and gentlemen. You're in a short trade with the advantage of momentum. You're in a short trade with a clear path on the large chart. You're in a short trade having entered where the market is most likely to continue. And guys, this is the best of the best. This is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. If you only focus on this entry, give me 20 days, 20 trading days focusing on this entry, guys, it does absolute wonders for your trading, because I know where the market is likely to continue, right? I know where the market is likely to continue. I've got clearly testable rules. And when you put the two charts together, you'll notice that when the large chart says up and the large chart says odds favorable momentum and the large chart has a clear path, I can circle that tail historically. I can go back 10 days, 20 days, 30 days. I can do it on 175 different markets. And if I circle this tail and it lines up with support inside of favorable large triggers, ladies and gentlemen, I have the highest probability trend trade ever. Let's go through a couple things that affect new users. A couple things that you guys think about, even though you don't need to. More than anything, we don't trade tails, guys. We don't trade tails. We don't find entries on the large chart. We trade pullbacks to areas inside of favorable large triggers. We circle tails on the large chart so that we can come back and see if our rules were met, so we can burn this look into our mind. Trust is earned. If this happens, we're good. Guys, this reversal bar happens. There's a lot of things that new users start to think about. The first one is divergence. Oh my gosh, there's a loss of momentum. I can't take the trade. Momentum is established on the large chart, guys. You've got to learn to trust the idea that odds favorable momentum trumps one divergence on the small chart. And then you're also going to have to remember that your trigger lines are not your entry point. Because if you enter up here, the market is still likely to go down here. The only thing you've done is you've increased your risk. And you have to remember that the small chart fluctuates. And if you get caught up, Elvis, no politics in my room, sir. Please and thank you. Don't get caught on the fluctuations, guys. The small chart's going to try and talk you into or out of things all the time with these fluctuations. Remember that from the reversal bar, this is your entry. And if you jump in because you see it start to go up, once again, all you've done is increase your risk. And more importantly, all you've done is reduce the distance to your target. So you're taking 20, 30, 40, 50, 60, 70 days to build trust in the idea that when this reversal bar prints, your only option for entry is where the market is most likely to continue. You'll grow from it. You'll find more opportunities. But for the brand new user, this trust is what it takes first and foremost. And TLC, if you're watching the video, as soon as you know where the market should continue and you believe in where the market should continue, well, then you can put your stop where the market shouldn't go. 4 or 5 ticks beyond that window of opportunity. Guys, this is the point where the market has exceeded the correction point. This is the point where it's gone beyond those bounce spots. And it's okay if the small crowd is capable of pushing it all the way to this area, guys. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's okay. It's a normal part of a positive equity curve. And if you don't have trust in your rules, and let me say this right now, if you don't have trust in your rules from the one that didn't work here, then you're going to talk yourself out of the trade when the rules are met. So it's just a matter of whether they're met or whether they're not. And you have to be okay. You have to be okay with the idea of starting simple, keeping it basic, learning to read your charts, and then embracing all the advantages that that brings you. The next best thing is that once it does start to do what the market said it was going to do, you get a reversal bar in the direction of the trade, you can reduce your risk even further, guys. You can reduce your risk a tick or two above that reversal bar. And now not only do you have momentum, a clear path, an entry area, it's going the right direction, even if it comes back and catches that stop, it's not uncommon to see Nexgen users taking maybe $30, $40 losers. 3 to 4 ticks, guys, because you're so precise with your entries. And you see this a lot, right? I'm in the perfect trade, the advantages were there, and I moved my stop appropriately, and darn it, it got me for 30 bucks. Who cares? 30 bucks, right? But what stinks is when the market gives you the information that you need to reduce risk, but you allow emotion, fears, hopes to take over, and you get stopped out down here for 300 bucks, way beyond the correction point because you thought that you're going to magically will the market up when the opposing forces wanted it to go down. You're not in control. And then once you're in, guys, you're going to have to manage it. And we're going to talk about a very basic management, but since I'm in the slideshow, we're going to go into it. So Jen, here's your first answer with divergences. A lower divergence pushes me to my entry. Thank you, loss of momentum to get me to the area inside of favorable large triggers. The reversal bar prints. My risk is virtually nothing because I waited for the fibs. But a second lower divergence, guys, a second loss of momentum where price couldn't even reach the first, that's an exit signal. It's okay to get out of the trade, guys. It's okay to lose a couple ticks. It's okay to only make $10. But what you're doing is you're beginning to say, this is a pattern more often than not that does this. This becomes a management opportunity. But the cool thing is it's not a trend killer. It just says, hey, let's keep the powder dry, right? I'm in at the best spot. Second divergence prints. I know about it right here and I exit and I'm saying I don't know if it's going to push it down or what. But once you get a signal again, get back in your trade if the large chart says go. And this is the one thing that I don't see new users doing. And Jen, we saw it on your chart yesterday, is you went long right here. And rather than make money and then make money again and then be patient and make it in the same range 3 times, you're at the point now in your career where you're holding through all of this and hoping that the large chart gives you this victory when the small chart's going to give you the opportunity to capitalize on the moves within the moves. And I'll tell you, this is one of the things, if you've never watched my brother trade, my brother will enter the market here and he'll take half of his position off here, and then he'll add on to his position here, and then he'll exit his position here, and then he'll re-enter all contracts here and take it right up to the profit target because he's using his chart reading to manage the trades. He's using not his emotion, his desires, his want for wins, but rather a very pragmatic approach, a defined exit and a defined entry strategy. So if you get in short, you get the second higher divergence, you exit the trade. If you never get that new signal, guys, then you never have to worry about it. And you're feeling pretty darn smart that a pretty basic rule saves your bacon. Other things to think about when you're in the trade. If I'm in the long and those 1-to-1s are up here, guys, it's okay to take profits at those 1-to-1s. It's okay to take off half your position in the 1-to-1s. And then if divergence prints from those 1-to-1s, this is a pattern that we've recognized that says, just get out. And if you get a new signal, cool. But if you don't, it saves your bacon. Guys, this is a reason to exit a trade. Divergence from a fib is a reason to exit a trade if you were short. And then what you're going to start to piece together is that if this is a reason to exit a trade, then isn't that a reason to wait for confirmation to re-enter the market, right? And that's how your brain's going to start putting things together. So, guys, management is the second half of what we do. Management is what you do with a great entry. So I'm going to give you guys a little something here, and I give it to you every day. And let me do it again. Where's my KISS plan? There it is. As you learn to read your indicators, as you learn to read your indicators, keeping it simple, keeping it focused, keeping it very, very just if then, very mechanical. This tends to be advantageous for the new users, guys. This tends to take a lot of the emotion and the fear and the want. And if you can find some way to talk yourself into the idea that the only way you're going to enter the market is if your rules are met, well, then this helps you a lot. That's literally taking half off, TLC. If you're trading a 4 lot and you take 2 off, right? That's taking half off. So that's exactly what John was saying there. If you reach those 1-to-1s, take half off, reduce your risk, right? They may create a bounce. And guys, that's smart trading. That is letting the indicators tell you when it's time to get a little more aggressive in protecting your assets. So I give this KISS plan every day. This KISS plan is a stepping stone in your learning journey. Elvis, I'm going to drop about 3 or 4 in pretty soon here. You'll dig it. This plan is designed to get you to learn to read your indicators. This plan is designed to get you to optimize your chances of success with the high probability trend trade, with that foundational trade, that trade that teaches you to read your indicators. And then we're going to add in what's called a 50-50 trade. And guys, a 50-50 trade is nothing more than being able to take advantage of an area with the potential to break. A 50-50 trade is nothing more than looking at your charts and saying to yourself, my small triggers have broken an area, but my large triggers haven't. This is an area with the potential to break, but it's not broken, which means that I don't have a clear path, which means that my rules aren't met, which means that it can't be high probability, which means that it's going to go into that medium probability scenario. But first, guys, you've got to get good at the basics. So through simulation, study, class feedback, continuous practice, I promise you, you will create a plan that suits your needs, that's tailored to your goals, and it's all going to revolve around your ability to read the indicators. So your simple plan for consistency, and again, guys, I give this every day. Every day I talk about this simple plan, learning to be a chart reader first. And one of the easiest ways to avoid 60% of the losers that most new users take is to not fight the large chart, to not trade into areas that may stop the market, to not fight the momentum established by the large crowd. And what you're going to find is that if you never fight the large chart, you're going to avoid a lot of problems, guys. You're going to avoid a lot of the challenges that most traders, not just new traders, have. And this is my favorite book ever. It's an easy read, How to Commit Financial Suicide in One Easy Step. Warning signs your friends are in trouble. They're trading against strong triggers. And for you NASDAQ users, that applies to both charts. Chapter 2, warning signs your friends are not paying attention as they trade in determination conditions. Guys, this was a joke put together by my brother years ago to remind new users of the biggest challenges that they're going to face is opinion. Opinion is the biggest challenge. You have to define your entry, and your is in all caps, guys, because trading is an individual sport. It doesn't matter what I would do. It doesn't matter what John would do. It doesn't matter what Paul, Surgeon, Walter, Greg, Tony, Chris, Donna, Tony, anybody does. It matters what you do. It matters what you don't do. So define your entry, and the best entry to define initially is the high probability trend trade. And the high probability trend trade is a trade that typically wins 70 to 80% of the time. I've never had anybody in the history of only trading high probability trend trades to the letter do worse than 70%. And guys, if your goal is to get paid, doesn't it make sense to give yourself the best chance of success as a new user? It gives you the checklist, and it reminds you that these are the advantages, guys. These are the advantages that you look for to entry. I'm also going to give you a checklist. I dropped it in the room. Print this out. Put it on your desktop, right? Make sure that you know exactly what you're getting into. Know why you're getting into it. Be able to identify and name the trade. Speak to yourselves in terms of advantages. But you have to be able to visualize the advantages, guys. If it's a strong top or bottom, it means that a termination condition reversed the market. Odds favorable momentum. Odds favorable momentum anything can happen. Guys, you have to know one as well as the other. No triggers through. The area is not broken. The path isn't clear. Small and large are through. The area is broken. The path is clear. Small's above, large below. The path isn't clear, but it has the potential to break. And then finally, your window of opportunity once again, guys, giving you the absolute best entry to reduce risk to maximize profit potential. I just dropped each and every one of these in the room for you. But the second half of entry is management, right? Once you have that great entry, you've got to do something with it. You can't just get in and hope to hell everything works for the best. That's not trading, guys. But once you define your entry, you're going to craft a plan tailored to your personal goals based on your experience reading the indicators. Once again, simulation, study, class feedback, and continuous practice is going to have you change this very simple management plan. But in the beginning, management doesn't have to be difficult. Management should revolve around the fact that your large chart said down, that your large chart had odds favorable momentum, that your large chart had a clear path, and that you entered at the area inside of favorable large triggers. Guys, and if you can pull this off, if you can take 20 days to study to know exactly where the market is most likely to continue, there's your window of opportunity right there. Well, then you know exactly where the market shouldn't go. And your initial stop goes beyond that window of opportunity, 4 or 5 ticks. And guys, here's the beautiful thing, is it's going to get hit. You will lose trades. If you take 100 perfect high probability trend trades, you're not allowed to be surprised if 30 of them don't fail or don't work. But the other side of that coin is that if you look at your rules, if you annotate your charts and you say, dang it, I had momentum, a clear path in an entry area, well, then that stop getting hit is nothing more than a cost of doing business. That stop getting hit is just a little road bump, right? Just a speed bump in your trading. But understanding where the market is likely to continue, your initial stops, guys, in your NinjaTrader, say 12 ticks. 12 ticks from 92 is, let's see, right about there, right inside the window of opportunity, just below resistance inside a favorable. And what I see a lot is that people get stopped out when they're still in the window. People get stopped out when they're still at the bounce point, where they're still where the market is most likely to continue, for whatever reason. Maybe they don't want to put that much risk on a trade. Maybe they got in early, right? They said, oh no, I better get in, it might go without me. And they said to themselves, I can't put $500 of risk on the trade. And they get stopped out at the perfect spot, and I see it all the time. So as a brand new user, I want you to just embrace the idea where the market is likely to continue where it shouldn't go. And once you do that, it's pretty awesome. And then you're either going to get stopped out or it's going to give you that reversal bar in the direction of the trade, guys. And once this happens, I'm going 2 ticks above it. I've pretty much cut my risk in half. The market is telling me that with odds favorable, a clear path, it's starting to do what we expect it to do. It's coming from the areas we expect it to come from the point. And now I've got, that little bit of risk on there. And I've already got 2 targets. And these are predetermined for the new user. And it's either going to hit my stop for a small loss or it's going to hit my first target. And the first target's $100. And this drives a lot of you nuts. And I know that. $100, if that's the best you pull off every day, that's it, is $100 a day, guys. That's a $24,000 increase in revenue every year. But you're trading a 2 lot, right? What if you get $200 every day? Suddenly it's $48,000. $100 is nothing to scoff at, but more importantly, guys, $100 really starts to create confidence. When you hear NinjaTrader tell you that you reached your target, when you see your P&L go up, right? You take this first profit and you feel comfortable, you feel confident. And then you're going to move your stop to break even. Tell you right now, break even's a pretty ridiculous stop. But you'll craft a plan tailored to your personal goals based on your ability to read the indicators. So until you can do that, break even takes all the pressure off. You've already been paid, you have nothing to risk, and it reminds you that the large chart is why you got into this trade. The large chart has so much momentum and nothing in the way that the expectation is that it's more likely to hit the second target. So 0 risk, 100 in the bank. And guys, if it hits the second target, it's a $300 trade. And you're going to exit without a care in the world of what happens next, right? And it may drop another $1,000. It may drop $1,000, but that's not your money. As the brand new user, lost sound. Guys, give me a Y if you can hear me. I want to make sure it's... Rob can hear me. Elvis, yep. It might be Tony. All right, cool. Guys, this is $300. $300. Let's do it. Nobody type for a second. $300, if that's the best you do every day, is a $1,500 week. And that's a $6,000 month, guys. And that's a $72,000 year, not going through all the there's this many trading days things. But roundabout, that's $72,000 from one successful high probability trend trade with the most pragmatic management that you could ever do. Absolutely, I will. So what happens, Haji? And this is that's a great question. And I'm not saying that it's ridiculous, because there's a point where it's appropriate. But if I'm in the market, right? And let's say that this is my $100 target and it hits it. Haji, if I get stopped out break even right here, it still stands to reason that my large chart still has odds favorable momentum, right? And my large chart still has a clear path. And all this is another pullback to resistance inside of favorable large triggers. Does that make sense, Haji? That's just a second chance entry. But if I hit my first target, then I went break even as a new user just to help me hold a little bit, to make me feel better about the hold. But what you're going to realize is that when your large chart is screaming, right, and you've got all these advantages and it's right here, that there's just no reason to move your stop. Because when everything is working great, and the cool thing is, Haji, is eventually maybe your second target becomes your first target, and your second target goes way off in the distance. But every trade that you take creates a management opportunity. And if you're not getting in at the right spot, then it becomes problematic. But eventually your chart reading is going to say, man, look at the strength and look at the clear path. And everything says down, well, I can probably hold this one a little longer. So I'd have to see the chart, right? What do you consider lots of advantages? And are you reading the chart correctly? So rather than saying, don't do this, I got to do that, as you grow, Haji, as you grow, you're going to begin to recognize patterns. And as you begin to recognize patterns, what's going to happen for you is you're going to say, man, I've seen, let me just do it real quick. I've seen this look on the large chart so many times. And I've seen this look on the small chart so many times that there is no way on God's green earth I'm getting out before this red line, right? But until you get that confidence, until you get that level of comfort, most of you jump out at the pink line. And you say, eek, it reached a pink line, let me get the hell out of this trade. And then you drop it in the room. And I say, hey, Haji, I want you to see a couple different things here. I want you to see first how amazing your entry was and how you virtually had absolutely no risk. And where you exited this trade right here, did you notice that the strength was the strongest, right? Did you notice that the path was the clearest? Did you notice that even your small triggers are outside of the large and everything on every chart is screaming up? Haji, this is a wonderful opportunity for you to start holding for bigger moves. And you're like, oh my gosh, I never thought about that, right? But it's that repetition that builds it, right? So 13.2 says scream into the upside. 13.2 gives us a perfect entry. And check this out. There's a divergence. One divergence. One divergence. And what does it do? It pushes you right back to the best entry. So Haji, this is another great example. If you were in at 52 and you got out at 62, with this look on the large chart, does it make sense to be break even at a midband inside of favorable large triggers? To the brand new user, absolutely it does, because you guys hate losing, and when you lose confidence. But when you've read charts for a little bit, you say, man, I'm going to keep my stop. I already got paid. I'll leave $90 of risk on here. I'll cover my commissions or something like that. And that's where the growing process really starts to come together, is through that repetition. So this is a very mellow way to manage your trades, guys. This is a way that is 100% if-then. If the large chart says take a trade, then I'll take a trade from the right spot, and I'll put my stop where the market shouldn't go. And if my stop doesn't get hit and I get a reversal bar, then I will move there. And then you just lift your hands up and say, I'm either going to get stopped out or I'm not. And if it hits my first target, I'll go break even. And if I don't get stopped out break even, well, then I'll let it run to my second target. And guys, all of that is right here in the spreadsheet for you. Every bit of that's here in your spreadsheet. You have the entry sequence for the short, for a long. You've got the mechanical management. You've got other people's pictures in here, seeing how they did it, right? This says Bobby's perfect 50-50 management. Bobby says the area is not broken, but the momentum is strong. The entry is perfect, and this is my first trouble spot. Let me take half of it off at the trouble spot and make sure that I don't lose any money, because it can become problematic when the area is not broken. Guys, this is the best freaking entry ever. So you take that picture and you begin to build this little repertoire of how you can manage trades. So your goal, ladies and gentlemen, first, track every trade that you take. Take the feedback, put it in the room. The second one is every time it's the perfect trade, put it in your personal trade setup. Put it in the personal trade setup. Make sure that you're committing this to your plan. All of the advantages to your plan. Show me, TLC, can you show me a picture of what you're saying? And then, guys, you have a section for personal management. You have a section for personal patterns that you recognize. You have a section for stop 5-1 trades if. A lot of you need to fill this out. Your goal should be to turn your section and make it look like the section that I've already put together for you. No worries. Hold on, TLC. I think I can answer your question. But guys, the spreadsheet, repetition builds recognition. The more times you see the perfect short trade, right? Odds favorable, clear path. And look at this. He entered, he got paid twice, he re-entered, and made money in the same location. In one move, guys, there's a lot of entries in there. You can take these fluctuations and make cash all the way down. It's fun to do that too. You feel like a rock star when you do that. But you've got to keep it simple first. You got to keep it focused first. And I completely forgot where I was going here. Okay, so TLC was asking, and I've got the picture. Let me find it real quick. TLC is asking, is it better to have the price bars in between the small and the large triggers or both triggers below the price bars in a long trade? So let me show you, and man, this was just absolutely eye-opening for me when my brother shared this picture with me. And it's not even a new concept. Let me find it real quick. It's not a new concept at all, but what it is, excuse me, is an understanding of what we call the momentum phase. All right. So there's two sides to the momentum phase, TLC, and everybody else in here. And I think that this is one of those things that's going to help you guys. So the first momentum phase, let's use the small triggers. Everybody sees the small triggers, right? The pink line. When my bars are left of the small triggers, in an uptrend, I'm in the momentum phase of the small triggers, guys. This is the best of the best. This is where you chart readers find opportunities to get into these moves a little earlier before the high probability trend trade. And then TLC, eventually you get to the wrong side of the small triggers. So the momentum phase of the fast moving indicator is gone, but here's your large triggers, and you'll notice that we're in the momentum phase of the large, and this is when it's best to take those high probability trend trades. This is where we're looking to buy Fibonacci support. So momentum phase of the smalls, that's your first shot from a good top or bottom. And then momentum phase of the large, this is where we're looking to buy or sell Fibonacci resistance in the trend trade. So one is a momentum style trade that leads to a trend trade. Does that make sense? Did that help? Did that answer a little bit? And guys, this will be recorded, but understanding where you're at in the phase. So I see a lot of you guys saying, I'm taking momentum trades, but you're taking them from here without momentum, right? You've lost it all, but you're looking for that momentum phase. And guys, the momentum phases are the same, whether it's a large chart or a small chart. If I cover up that 34, it could be a 5. And the momentum is the momentum. So no, you're okay. But it's great to reinforce these lessons. And man, if you never ask questions, guys, you never get these lessons. So I'm going to scroll up. Guys, if I missed a question, let me know. I'm going to look through some of them. So TLC asked about the 4 lot taking half. And then somebody said, what do you click to take half off? So Andy, the way you're going to do that, I knew that there was a question that I wanted to see. The way you're going to do that, and let me see if I can find just an example of one. I'm looking for somebody with multiple contracts in there. Let me see if I have one of John Novak's pictures. Oh, you know what? I know how to do it. Hold on one second. I know where I need to look. Let me go to my entries. One second. Well, shoot. All right. So I'm going to have to do this. Sorry, I thought I had pictures. So when I'm taking multiple contracts, guys, I'm going to show you what I'm doing. And I need to find, oh, you know who always has pictures? Hold on, I got you. I know who always sends me amazing pictures with targets out there. Here we go. So when you're taking multiple contracts, you have to have multiple targets. So what happens, guys, is when you're looking to take half off, what you can do is here's my entry, right? Here's my first target at the first problem area, and then there's my second target. So you don't even have to click anything. You just have to get that target in the correct spot. And then when it hits it, you're half off. Does that make sense? So I see people trading 1 target, 2 targets, 3 targets, 4 targets, and lining them up. Lining it up over and over. So that every problem in the way, they're taking profits, but they remain in the trade for the rest of the move if it's appropriate. So I hope that helps out a little bit. And then Haji, we covered that about break even. And then let's see what else we have. Is it better to have price bars? We just covered that one. And you know how to pull it down? Okay. So what's cool, Andy, is when you're trading 2 lots is you'll be able to pull it down. You'll be able to move it up. So if you're looking at one of those scenarios, right, where Let me open this up real quick. If you're looking at one of those scenarios where you have yellow 1-to-1s, but your target is up here, well, then you can pull it down to here. I don't know what ODS is, TLC. I stink at acronyms. What is ODS? So yeah, you can click it and drag it and put it exactly where you need it. To help me out, TLC, what ODS is so that I can get you an answer for sure. I am not the best acronym person. Let me figure out what the last chart was. Hold on. Oh, shoot. I don't know. That's her annotation on her chart. Maybe odds favorable momentum, if I had to guess. That's her way of saying that she has strong triggers. Odds, maybe. Because you don't have to type a lot. You just have to know. Stupid. That was a message for me that she put on the chart. So guys, let's recap. What have we done today? We've talked about following a plan, and this is probably how we're going to end it, unless you guys come up with a whole bunch of questions that you want to talk about, which I'm totally cool with. Totally cool with. In order to follow a plan, you have to have a plan, guys, and your plan has to be proven. Your rules have to be proven to win more than they lose. If you're taking trades and you're losing, you have two courses that you can take. The first thing is you can try and figure it out on your own and hope that things get better. Or you can just drop a picture of it in the room and say, hey, Mark, I keep losing these trades. What am I doing wrong? Right? I keep losing this trade, Mark. What the hell am I doing wrong? And I'll look at your trade and we'll talk about advantages and we'll say, man, I notice that you keep trading in determination conditions, or I notice that you keep fighting the trigger lines. And the biggest thing, guys, if you really want to minimize your learning curve, you've got to post in the room. Every trade, win, lose, or draw, and if you win and the rules are wrong, you may have a short-term victory but a long-term failure. How are you going to know the difference? You need feedback. That's what I'm here for, guys, every day. And if you're on the simulator, if you're not like, man, I bought the software, I'm entitled to be rich, right? Participate in class. You can't lose money. All you're doing is learning, and you just need someone to tell you what you did right or wrong, and that really is the educational magic. And that is where this comes in, guys, where you post your trades, where you go through, where you can do all this. Take care, TLC. I have a feeling we're going to be done a little early today. This is where the feedback comes in, guys. This is where you type it in, where you take the lessons, where you say, man, I'm still learning. Let me ask somebody that can do this and give me a read. And then this is for you new users. And I created this the other day. And I see this all the time. And I tell you guys, take pictures. Take pictures of everything. Take pictures of your charts. Take pictures of your rules. Take pictures of everything. Commit it to memory. Recognition comes through repetition. And I may tell you, hey, take 25 pictures of strong triggers, and 99% of you won't do it. And 25 pictures of weak triggers, and 99% of you won't do it. And I can't for the life of me figure out why. And I can't figure out why I didn't do it either. My brother told me the same thing. So I added this, guys. This is Chart Reading 101. This is literally your roadmap to success, getting there the fastest as you possibly can. 25 pictures of strong triggers, 25 pictures of weak triggers. Put them into your spreadsheet and compare them. 25 pictures of a clear path, 25 pictures of termination conditions. Compare them. Learn the looks. Make it so that the looks are easy, so you never have a question about strength or weakness, about a clear path or a termination. And then you'll add in those 50-50s and you'll add in those entries. And guys, what you're doing is you're just getting to the point where you can see these things at a moment's notice. And the task is not simply to take pictures, guys, but annotate charts with the whys. So if I take pictures of a strong trigger, I need to not only say, this is a strong trigger, but this is odds favorable momentum. This market is likely to continue. So I'm not only taking the look, I'm taking what the look means to me, right? That's the advantage of momentum. This is rule number one. I don't ever want to miss it. I don't ever want to miss rule number one being met. And then the same thing with termination conditions. Guys, don't just take a picture of the market bouncing. These are all termination conditions because price reached the area and the triggers remain above support and below resistance. Here's my recipe for recognition and what it means to me as a trader. And guys, what you do is you become an awesome chart reader before you ever have to take a trade. And then if you see these looks so many times, it becomes easy. And then if you go through and you look at 300 pictures of other people using it, you learn how to identify it. And what you do is you develop this trust in the idea that the accumulation of these advantages, guys, these advantages coming together is why you should be taking a trade. And when you can identify the advantages, guys, you know when they're not there. And this is the cool thing. Let me show you this. This is your growth piece. That's your high probability trend trade. The first trade on the KISS plan is a 50-50 trade, which means that you don't have a clear path, which means that you should have a plan that insists on momentum and making sure that your entry areas are perfect. And if you don't have momentum, doesn't it stand to reason that a clear path in an entry area, you should never give away 66% of your advantages. And if I don't have an entry area, but I've got momentum and a clear path, well, then I can use my chart reading to still understand where the market is likely to continue. And guys, I love this. I think you should print this out, put it on your desk, and take a piece of paper. And every time your chart read says that an advantage is gone, you know that you have to manage assertively. And then Andy, did you see John's answer? It puts a limit order in the current bid-ask price. Maybe you get filled, maybe you don't. If you want to fill for sure, market orders. So buy ask, buy bid, sell ask, sell bid. Andy, I've never used them a day in my life, and I'm glad that my brother came in with the answer. I use limit order, and I wait for the market to come to my entry, or I use buy market now, sell market now. If I'm waiting for a confirmation sometimes. I've never used ask bid in my life. I don't use reverse. But I will use close if the rules are no longer met. So what else do you guys want to talk about? I think we got most of them. Tony, take care, man. For you guys that are NASDAQ traders, there's a whole section in the spreadsheet dedicated to making your entries easier. NASDAQ is fun, guys. It's pretty much all that I trade. It moves fast. But I can trade it because I understand my rules and I understand what I'm looking for. So it makes it easier. I can, John. Update your spreadsheet, man. And I think John's going to put this one on the website as well. So hopefully this becomes a part of it. John hasn't sat in my class in forever. And I'll tell you what, it makes me nervous when my brother's in my classroom. I don't know why. All right, I want to go over one more thing. One more thing. Things that you have to know before you ever sit down, guys. Before you ever start trading for the day, you have to know what your rules for entry are. And if you can't spout them off in a second, if you can't identify them on the chart, then you need to study a little more probably. You need to go through and take more pictures, ask more questions, participate in class a little bit more so that you know exactly what it takes to get you into the market. And then you have to know what are your management rules after you entry. Right? I know, right, Andy? What are your management rules after you enter? And guys, this is dependent on the trade. So if you don't know what kind of trade you're in, how are you going to know how to manage it? If it's a high probability trend trade, you have to know what it takes to get you out of that trade. And if it's a momentum trade, you have to know what your exit condition is. And if it's an HVA trade or this or there, guys, you have to know what it is. You should also understand what your daily goal is. I'll drop everything in. Anything that I have, Elvis, I'm glad to share. There's this one. What's your daily goal? If your daily goal is $500, show of hands, guys, let's make ourselves all really vulnerable right now. Who has exceeded their daily goal only to blow out an account in the exact same day because they didn't stop trading? Anybody? I've done it. Not afraid to admit it. So if you reach your daily goal, yep, me too, John. If you reach your daily goal, it's okay to shut it down, right? It's all right to shut it down. Man, I had a great day. Let me end on a high. And then the same is true, guys. Let's do it again. Who has exceeded their daily stop loss and just continued trading? Because all it takes is one more trade to get it back. All it takes is one good trade, and I'm going to get it all back. And then suddenly you get that external from Apex that says your account is in liquidation. When all you really needed to do was say, hey, you know what? I'm only willing to lose $1,000. I'm at $1,100. I should shut it down. I'll do better tomorrow. And we all have, Andy, and that's why this class is so effective, is because I'm not up here telling you guys that you suck for making these mistakes. I'm telling you guys that I have made these mistakes too, and I'm here to help you grow through them. Oh, Jen, you've only posted winners. You're breaking my heart, Jen. I thought we were better than that. I thought this is a relationship built on honesty. All right, can I put you on the spot for a second? Because I feel like we're cool. How much has only posting winners helped you avoid losers? And I see this a lot, guys, and I'm guilty of it as well. If all you give me are the great trades, that's not what we're trying to fix, right? So, good stuff. And let me read. I'm going to go up, and I dropped this one in here. And guys, if it's not clearly drawn out, you're prone to let adrenaline, opinion, fear, greed fuel the moves that you take. Sometimes the market is slow and you keep sitting, and that's why I take breaks in the mornings. And this was actually a response to somebody's email to me. And I always tell you guys, go stretch your legs, right? Because if you sit too long and look for trades, what happens is you end up taking trades that don't meet your rules. Go run a lap. And if your goal is 1,000, it's okay to go sim after. And it's greed that's making you pull the trigger again live. And if you lose, you're below your goal. That's fear making you take another. Because we all know we can get it back in one trade. And guys, we've all done it. And you could probably go on for days about this. So I dropped that one in the room. And then Tony, you say you're having trouble reading the chart. It's just too busy for you to understand. Is the best course of entry to pay attention to the small triggers? Is the will turning off an indicator or trigger make it easier to read? Tony M., are you still in here? Are you with me? I'm looking for you in the lineup. You are. So Tony, that's okay, Jen. Everybody does it. And guys, yeah. Have you ever heard me ramble for the last 30 or 40 minutes of class, wishing you guys would give me something to talk about? That's your cue to show me everything. And if you don't, I can't help you. So Tony, let's do this, brother. Let's keep it really simple, okay? More than anything, large chart leads the way. So if you create a scenario where you always have direction, momentum, and areas lined up, Tony, are you comfortable with your large chart read? Are you comfortable letting the large chart lead the way where what you're really looking for is, and we're going to go through an entry sequence because I think this will help you a lot. So the large chart says up, and the large chart says momentum, and the large chart says clear path. Are you comfortable with this? Because if you're not comfortable with these rules, this is everybody, not just Tony, then you shouldn't even be looking at the small chart yet. Because the reality is that if this chart doesn't say go, for the brand new user, there's just no reason to look right. There's no reason to go to that chart. But once your large chart says go, I'm going to give you the order of operations of what to look at, Tony. The first thing you're going to do is you're going to wait for the small chart to give a reversal bar. That's it. Everything's going up and you're feeling left out and you're sad about the market going without you. But you have to write it down on a piece of paper. The only thing that I'm looking for right now on a small chart, Tony, is this red bar after all the greens. That's not too hard, right? Because it either happens or it doesn't. So there's your first step. And then, Tony, once you get that reversal bar, whoops, wrong one. Once you get that reversal bar, the only thing that you have to look for are your trigger lines. So don't worry about, where was your picture? Don't worry about all the divergences, and don't worry about this line, and don't worry about all of that and these and those and them and that. All you have to look for is your trigger lines and say, where are they? And that'll take you a fraction of a second. If you know where to focus your attention, it becomes pretty easy. And then once you find your trigger lines, trades happen from areas within them. So Tony, you're not looking at this line because areas are dictated on the large chart. And you're not worried about one divergence because momentum is established on the large chart. So you're not getting distracted by all those different concepts. You're only looking for support inside of favorable large triggers. And then once you define it, man, all you really got to do is realize that you're powerless. Activate a limit order. And it either hits it or it doesn't. And the reason we get confused looking for trades, the reason we get confused is because we don't have a very clear concept of what the rules are and what it should be. And that's where I think annotation is key. And that's where I think annotation yields huge results. Because, let me see if I can find a picture. This one says perfect trend trade look. Because I don't worry about the fluctuations. I don't worry about the lines in the distance. I don't even worry about whatever's going on underneath. All I do is I focus on those areas right inside of favorable large triggers. And Tony, this is nothing more than practice. So I want you to ask yourself, if I went back and I took 25 pictures, if I dropped 25 pictures into entries, wouldn't it make it easier to know what I'm looking for the entries, right? And that's where the repetition comes through. Elvis, the completed spreadsheet. All right, John's giving me something there too. I'm not sure what he just said. When I drop this in the... Oh, I may have given the wrong one. So let me close this out real quick. And let me open the one that I just put in the room. And it's going to load it. And let me open it. And the one in the room that I just opened is very much the one that I shared. So hopefully that works. Oh, yeah, John, it's completely different than the user guide. That's why it's been changed 1,000 times since the user guide. User guide hasn't been updated in a long time. We update this one every day. Every day we do something on this chart. So, Tony, does that help a little bit? Focus on what's important, areas inside of favorable large triggers. And eventually, through repetition, you'll weed out the noise. You really will. But I'm going to tell you guys right now, and I say this from the bottom of my heart, if you don't do the work, you're never going to be able to weed out the noise. It's always going to be chaotic to you. But if you focus on the individual pieces, if you focus on the little bits that create the trade, it really does. It gets pretty easy. And guys, I'm going to read this, my brother's dissertation. When you trade and practice the wrong rules on simulator, you're brave and you win those trades because you do not care if you lose. You'll do things unknowingly that will sabotage your live trading in the future. If you're not practicing very strict, repeatable rules, this is a mistake. When you switch to real money with a false sense of security and honestly care about losing money, you'll normally lose 4 of your first 5 trades that don't fit the rules, and you lose 100% of your confidence. You think that it's a mistake, so the next few days you continue to wipe out your trading account in disbelief. You then start this negative psychological spiral that's hard to get out of, guys. And when you realize you spent months lying to yourself, and now you've got to start from day one again and do it the right way, it's very frustrating and it's avoidable. So don't be a victim to human nature. We have to answer to confidence building. Learn the rules, post your trades, use the spreadsheet, do it correctly one time. Keep this picture on your desk, look at it every day, work hard and be consistent. And man, that's good stuff. John, give Melinda a hug for me. And post your losers so you know how to avoid them without a doubt. And then Jen, Mark, on Friday, here's an example of a lot of fib levels. You got confused with them. That's perfect. Elvis, that's the right one. There's 4 tabs down at the bottom. You're just looking at the 101 tab. So you're right. You just have to click through the tabs. Take care, Tony. Hey, thanks for being here. Keep asking questions. And yes, Haji will do that. Let me answer Jen's question. And then I'd be more than happy to. All right, Jen, are you ready? Man, I'm going to tell you right now, this answer isn't going to be the one that you want. Okay? When price reached this fib and the triggers didn't break it, no more long trades. Cool? When price reached this fib and triggers didn't break it, don't trade short into it. I'm using new user blanket rules. Don't trade short, don't trade short, don't trade short. Now it has the potential to break. There's your short trade. Has the potential to break. Don't trade into it, but you can trade through it with the momentum. Price reaches the termination condition. No more short trades. 50-50, look for an opportunity. Area reach, no longs, no longs, no longs. Area breaks, triggers through. Trade from it. Go through the same process every time. If you have 1 line or you have 100 line. If price reaches, triggers below, above, it's not your money. Not in the beginning. I put it's not. It's not your money. And Jen, this becomes frustrating on a day where you're like, damn it, not my money. Dang it, not my money. Son of a bitch, not my money. I can't believe it's not my money. Where the hell is my money? And that's what happens sometimes, right, guys? Sometimes there's an entire move where you can't find your rules met. And let's go back to that darn phrase, Jen. Through simulation, study, class feedback, and continuous practice, you're going to create a plan tailored to your personal goals based on your ability of reading the indicators, which means later in life, with all this strength and this great bottom, this is your money. You're going to find a way to take it. You're going to find a way to capitalize. You're going to understand that it's no longer high probability, and you'll use a smaller, faster chart. You'll use those lower divergences, those one-to-ones with divergence, to manage out if you need to. You'll find a spot where this support has every trigger above it, and even though it's coming off of an area, you're like, every indicator on every chart says it's likely to go up. I'm willing to find a low-risk entry here and then manage out if it becomes problematic. Does that make sense, Jen? So if for the brand new user, it's not your money. For the brand new user, you don't have the ability to read your indicators fast enough to trade into areas, to fight divergences, to not have an area inside of favorable large triggers. And you're relying a lot on luck. But the cool thing is, Jen, and especially as much as I've seen you grow in the beginning, you're going to be just fine. You're going to get there. And this goes back to the one you probably popped in late. I took this picture this morning because this is exactly how class feels a lot. Everybody has a starting point. And we know where we want to go, guys. Walt Disney represents consistent, profitable trading. And everybody wants to get on that roller coaster. Everybody wants to be on Space Mountain. But they haven't even left Dallas. They're still in Texas. And it's the journey between Dallas. And notice that it's not a straight line, right? You're going to take wrong trades. Even more importantly, there's different ways to get there. The goal is still the same. The goal is consistent, confident trading. But you're going to take wrong turns. Post your losers. You're going to run out of gas. When you break a rule, drop it in. Let's have a conversation, right? But the thing is that you will get there if you stay the course. If you stick to the plan and you move forward, you're going to get to where you want to be. But everybody forgets that they're new at some point. And that every move in the market can't be your move. It's not even feasible for every move in the market to be your move. $22 billion traded an hour in the futures markets. $22 billion traded an hour. You guys only have to capture 1,000 of it a day. It's pretty easy. If that's what your rules say, Elvis, you are. If your rules say I can trade into it because of XYZ, then you're not. And guys, it's an individual sport. Elvis, you may remember a guy in this classroom that used to go long here against long triggers and get his butt kicked every time. And then he'd do it again and again and again and again and again and again. And eventually he posted in the room and he said, man, but my fibs say, but my 72 charts say, but this, but that, but these, but those. And he got feedback. And the feedback that he got was stop trying to be first. You don't control the market. Wait for the advantages. Oh, that was Elvis. Elvis showed me every long trade. Forever. I'm going short right at the line, and I'm going to put an enormous amount of risk. And that blue line has to hold because I think it should hold. And you get smoked all the way down. And then you post this one aggressive long that wins $500, and I see your P&L over here, and it's negative $72 billion. And you're like, look at how awesome I am. I'm the best trader ever. But you're not. Because you just lost everything here, and you didn't bother to learn how to fix it. But you had one good trade, and you're like, man, I must be a prodigy at this point because look at the $1,000 I made. Look at how I broke every rule I have and held it for the duration. I'm amazing, and you should want to be me. And guys, that's not how trading works. Consistency. And Haji, I just pulled up my Ninja Trader. And the biggest post losers, guys, post losers. Yeah, Ben Crazy Ed is probably one too, right? I can go to the archives, Elvis, if you need me to. So let's finish with this, guys. Market replay. Here's my Ninja Trader 8. Market replay. What is market replay? Guys, market replay gives me the opportunity to go back and practice. Market replay gives me the opportunity to double my repetitions. The only thing Nexgen can't give you is experience, ladies and gentlemen. Market replay allows you to double, triple, quadruple your experience. Over a 3-day weekend, Andy, market replay is going to keep you from wishing you were doing something in the market. So the first thing that you have to do is you have to disconnect from your live trader. And let me do this real quick. Let me go to day trading and click on this, and let me go to market replay. Because guys, I'm going to give you a fish, but you've got to learn to fish, and this is one of the most valuable tools that you will ever use. And there's a giant video on how to do it as well if you don't get it from the one time here. But the first thing that you have to do is go to playback. And when I click on playback, it's going to ask me some questions. It's going to say, hey, Mark, what market do you want to get replay data on? And I'm going to say, you know what? I'm going to do crude oil because I feel like crude oil is a great place for me to practice. It moves smooth. It's flow. The rules met. And what day do I want to do? How about Tuesday? And I'm going to download it. And then once I download it, it's going to load that data. Wow, and that went really fast, which is pretty cool. And I'm going to click continue. And when I click continue, it's going to give me this cool little, when did I start? When did I end? I've got the dates that match. And guys, a lot of people go back, and this first date is like a month back, and it just kills it. It absolutely kills it. So I'm only doing the day that I want to play. And then I'm going to come to my workspaces, and I'm going to open up my crude workspaces. And they're going to open up for the 26th, and they're going to open up at midnight on the 26th. And we'll let that calculate. Right on. Have a good one. And guys, this is what Market Replay does for you. While those are loading, I can bump it up all the way up to 1,000 times speed. But you're not going to be able to chart read at 1,000 times speed. Nobody's that good. But what you can do is you can do it 10 or 15 times speed. And once you're all loaded up, just hit play. And that market starts to move like it was live. And I can go 50 times speed. And what I can do is I can start using this, just the large chart if I want. Area has the potential to hold, right? And so far the area is holding. And this is 500 times speed, guys. This is what the market looks like in the middle of the night. So let's get ahead a little bit. Let's go max. And let's bump it forward. And then let's pull it back down. So here's the cool thing that you can do with Market Replay. My triggers say down, right? I think I have a short trade. Let me pause. And let me really get a chart read here. Let me pause, and more importantly, let me look at my high probability trend trade checklist and see if I'm about to follow my rules. Well, I don't have momentum because the colors don't match. My rules aren't met. I don't have a clear path because I reach resistance and none of the triggers have broken. And guys, here's the thing, is half of you are looking right here and going, look at that, I got an area inside of favorable large triggers. Man, I should probably go long. Has anyone ever done that? This chart says no way in hell. This chart says take an entry. This chart leads the way. So I look at my checklist and I say, nope, not a trade, and I hit the play button. And I let the market go again. And it's going, and it's going, and it's going, and let's see what it does here. And now I'm saying to myself, I had a termination that reversed it, and I've got momentum, but the small triggers aren't through resistance yet. That means that it's a termination condition. That means that my rules aren't met for a long. All right, let me hit play again. And we're at 50 times speed. That's 50 times, guys. It's the middle of the night. Oh, it's 5 a.m. And that one ended up working without my rules met. Nope, there's divergence. And look at the fluctuation right at the key area. If all you do is stare at the reactions. So guys, I want you to see this. That was a termination condition. And it gave you false hope. And then it ran you over. And what you're looking at is the fight right in between. So guys, you can go through and you can do this every day. So you can finish the day, right? Like, okay, I'm going to finish the day today. I traded, I did well, I did poorly, I don't know. And then I'm going to go back. So Roku, if you look up top, there's a website. So if you're at work and not looking at it, it's going to be hard to do it. Let me put the link in one more time. Watch this video. Do you have two monitors? Guys, if you have two monitors, play the video on one and have your NinjaTrader up on the other. You're welcome. But what Market Replay does for you guys is you can double, triple your reps. You can go back and fix the mistakes that you made. And that's right here. You guys remember this picture, right? After class the next day, download data, retrade it. Retrade the day, fix your mistakes. Take the trades you missed or skipped. Take pictures of the correct trades. There's that damn task again. And repeat this process every day until you always take the correct trades. Because the correct trades are the ones that win more than they lose. The correct trades are the ones that provide a statistical advantage. The correct trades are what we're looking for every day. Elvis, there's your link to the market analyzer. There's your link right there. Everything you need to know about it. Adding symbols, rolling contracts, step by step, going through the market analyzer. Typing in 100% anything and everything that you need there. Is what auto? The rolling is auto, Nexgen, Ben. The rolling, it'll give you a message that says, hey, do you want to roll? You can say yes or no. And then Elvis brought it up. This is how you can check the volume between the two contracts to see if you should roll. So I always click no, and then I run the market analyzer just to make sure. Because if it rolled, but there's 1.4 million more, you do, Elvis. Got to put your big boy panties on. Oh, you're absolutely welcome, Jen. Thank you for being here. I hope you have a great weekend, a great Easter. And guys, if you're too lazy to do this, all you have to do is Zell me $100. I'll get on your computer and I'll build a market analyzer for you. Zell me $1,000 and I'll scroll back and circle tails for you. But all the money that you spend without the effort, you're still not going to be a trader when I'm done doing it. You're still not going to be able to do it when I'm done doing it. And that's not true. You can't Zell me money to have me do things for you. I'm not going to do that. My job is to teach you how to be successful. Your job is to give a crap enough to actually do it. And that's the part that's challenging. You will get out of this software what you put into it. If you put in the time and the effort, the simulation, the study, if you ask for the feedback, guys, you're going to get to where you want to be. If you fight it tooth and nail, it's okay. It means that you're human, but it's going to take you longer to get there. It always looks like fun in the beginning. And then we've all been here. I don't have any idea what I'm doing, but I'm going to keep doing it. And this is where you yahoos open up 72 Apex accounts. I'm not sure if I can qualify on one of them, but I can use the multiplier that I saw in the other room, and I can open up 20 Apex accounts and blow them all out in unison. Which, in my opinion, and guys, I don't give advice or anything like that, it's asinine. Why on earth would you blow out 10 accounts at the same time? Take one. Took you 5 years, Ben? I'll tell you what, guys, I still have days where you thought I'd never read a chart in my life. I still have days where I do that. They're few and far between, but if I don't recognize it, I can do a lot of damage. And then, guys, this is where you get this false sense of security. You have never asked for help. You've never taken a picture. You never used your spreadsheet. You never even wrote down rules. And then, and guys, this right here, my brother put this in because that's the Mark Novak story. I lost $5,000 in a couple hours. This is before Apex and stuff like that. I lost $5,000 on 21 trades, and it took me about 2 hours to do it. Not one winner. And you know what the sad thing was? Is I had no idea why I lost. I didn't even know why I entered the trade. It was nothing more than me hoping that I would make money. I had never taken pictures. I didn't have a plan. I didn't know what it was supposed to look like. And the sad thing is my freaking brother wrote the software and told me that he would help me every step of the way. He promised me if all I did was follow a plan and take pictures and ask for help, he'd make sure that I found success. And I told him, go to hell. What do you know, John? My name's Mark freaking Novak. I'm going to be great at this. I'm entitled to win because it's your company. And man, it didn't work out for me, guys. And I hit the I don't know shit stage. And I'm going to tell you from my own personal experience that I was probably a day away from quitting day trading ever. I was probably a fraction of a micron away from never opening software again because I was so dejected at what a rough time I had and how quickly I lost money. And I said to myself, I said, you know what? He's been doing this a while. I'll just prove him wrong because, I'm spiteful. I'll just prove him wrong, asshole. I'm going to post my trades in class. And I'm going to use a spreadsheet and I'm going to learn the rules and I'm going to simulate and I'm going to simplify and I'm going to do market replay. And man, that'll teach them because when I suck after I do all of this, well, then I'm just going to, I don't know, take them off my Christmas card list. I said self. And guys, what happened is when I followed the plan, and this is a true story, when I followed the plan, I woke up one day and momentum made sense. And I woke up one day and termination conditions weren't so hard to recognize. And then suddenly I was finding entries and pretty soon I knew my rules. And once I knew my rules, I was like, holy crap, this is doable. Oh my gosh. I have to call my brother and tell him that he's not full of crap. I have to call my brother and say, man, John, it turns out that that's not a bad plan. And guys, if you have a brother, you know that it sucks to tell him that he's right. And then right about here is where I started teaching the 101 class. And some of you were in my 101 class. Right about here, I said, you know what, John? All the things that I thought were obvious weren't. And all the things that I couldn't pick up in that advanced class because I didn't understand the terminology, it didn't make sense to me. Hey, John, can I teach a 101 class? Can I teach these people to avoid the mistakes that I made? And he goes, man, Mark, I think that's a great idea. And every day at 2 p.m. Eastern, I taught a 101 class, and it lasted 2 hours. And it was the same first hour that I teach every day in this classroom. And then John said, you know what? It's not fair that I don't make money trading my own software. Mark, do you want to take the morning class? And I said, I will. I said, but here's the deal. I don't want to stop teaching the basics. I don't want it to be an advanced class. I want everybody to have the same foundation that helped me find success. And guys, eventually you get to I did it. You really do. And I know this sounds kind of preachy and a little soapboxy, but I watch people fail every day, but I watch just as many people succeed from following the plan. And it comes down to making a choice. Do you want to follow your rules? Or do you want to be the adrenaline junkie? I'll send you a link to go swim with sharks or jump out of planes if it's adrenaline that you need. But trading is a business, and you wouldn't open a business without a plan, right? And you wouldn't open a business and over leverage yourself or something like that. Thank you, Ben. And it comes down to, I've gotten amazing at this because I've screwed up everything that you guys will ever screw up, and I found a way to fix it. And I've found a way to not make the mistakes again more often than not. So I'm not coming from a guy that's just reading a textbook and saying, this is what I'm supposed to say about this. I'm coming at this as a guy that had to learn the basics, that had to go through, that had to take the lumps and eventually get to where they wanted to be. So keep showing up and asking questions, and I'll keep doing this. I promise. I love doing this. This is a lot of fun for me. And there's so much exciting stuff in the works with Nexgen. If you guys are in the traders chat, you know that Nexgen is opening a funding company. That Nexgen will give you the opportunity to trade your plan or to trade our plan. And Nexgen is going to provide you education so that you can be successful with a proven plan. And guys, I'm telling you right now, we don't want to fund a bunch of people that just keep blowing out. It's a great revenue builder, but we want successful people. We want to be an industry leader. We want to be the people that create the absolute best of the best, that give you the highest chance of success. And it's all in the works, Nexgen Ben. I know he's mentioned it in the other room a couple times, which is why I'm comfortable mentioning it here. And I don't know details. I do know There is, Elvis, you would have to talk to NinjaTrader about their NT8 fix. My brother spent $500,000 making sure that it wasn't Nexgen. Um, but he is working on the browser version where you guys could sit on the beach with your iPad and trade Nexgen software. And that's coming too. Um, and just like anything, technically, it takes a while to make it right, and there's no reason to put it out there until it is right. And it's okay to be a lone wolf, Ben, but I love it when you show up and chit chat for a little bit. Um, Trading is a lonely sport. It really is. But all the fun stuff you get to do, all those motorcycles you get to take to the top of the mountain, kind of makes it worth it. So, Elvis, it's been done for months. No matter how many capital letters you put into it, the challenges aren't with the software. My brother has spent all the times. The software is the same. 1390 KTM Duke. Nice. That's a lot of CCs. I do like KTMs. You did pick a great time. And if you ask anybody, ask Ben. Ben was here, what, 7 years ago, Ben? 7 years ago. And it's gotten a lot easier, hasn't it? It's become a lot more clear. It's become a lot more refined. It's so much easier than it used to be, guys, because we never, ever stop. No, Jen, I was announcing my retirement. Did you miss that? This is my last class ever. So good luck. No, I'm not going anywhere. I enjoy this too much. I enjoy it too much. So much so that I've given up the tattoo shop. And once the next stage with Nexgen really starts to come into play, guys, I'll be 100% full-time, 40 to 50 hours a week. And I'm excited about that too. And there's so much awesome stuff in the works, but until it comes to fruition, guys, work on your chart reading. Work on your chart reading and get to the point to where your reads happen instantly and effortlessly. I'll still be tattooing, Elvis, but I probably won't be working in a shop. I'll have a private studio and just tattoo friends and family. Come on, Roku. I got you. Did you guys know that that's what I do? Everyone thinks I'm kidding when I say it. Guys, when I'm not teaching you to trade, I'm drawing on people. Pretty cool, right? No, that's me. This is what I do. You have to have something outside of stuff, right? You have to have something that isn't work. And that's me. I've been an artist my whole life. I'm an artsy fartsy daydreamer kind of person. I was an English lit major. I write my wife love poems, right? I draw pictures, I paint. So, which is why I'm the worst tech guy ever, because I failed college algebra 4 times. I don't understand numbers. Actually, I don't understand variables. I'm good with just regular numbers. But guys, that's it. That's why I draw when there's no rules met. That's what keeps my brain occupied, Jen, is I'll doodle. And sometimes, I kid you not, I'll draw a circle on a piece of paper 800 times while I'm waiting for my rules. Just a circle. Every now and then I'll shade it. That's it. It's just Instagram. That's all it is. That's what the kids go to. There you go. There's a couple Nexgen users that follow me. And Jen, it's just repetition. And I can't stress that enough. It's just it's just repetition. My brother's most famous saying that he ever said to me was, Mark, eventually you'll get so tired of losing trades from breaking your rules that you'll stop breaking your rules. But Jen, you have to give yourself a little bit of grace. That's my wife's favorite phrase. You have to give yourself a little bit of grace. You have to give yourself some leeway. You're new, you're learning, right? You would never, I know You would never put the pressure on your kid to be perfect at the brand new sport that he just started, right? You would never put the pressure on your kid to be the smartest kid in school on day one of high school. But we all put that pressure on ourselves because we're all overachievers. Start with 25 a day. And I think that's the biggest thing too, right? So take care, Mariboy. Thank you. Is there anybody in this room, be honest with me, is there anyone in this room that doesn't think that they can make $100 a day effortlessly? If your only goal was to make $100 and shut down and go do something else, is there anyone that doesn't think they could pull that off? Because if you don't think you could pull that off, then we need to work on a couple basics, right? And I feel very comfortable saying that everybody could do it. But the problem is everybody feels entitled to $1,000 a day. And if $1,000 is good, let me keep trading until I make $2,000 a day. But you've never even proven that you could make $100 a day 10 days in a row. Why on earth would you think that you could make $1,000 a day? So, Jen, why not make $100 a day for 5 days? See if you can do it. Give yourself a challenge. And then once you hit the 5th day, turn that $100 into $200. And after 5 days of $200, try for 3. And then instead of trying to make $400, why don't you add a contract and turn that $300 into $450? And then add a second contract with the exact same management plan and turn that $300 into $600. Whoops, that was the wrong number, right? And now you're not taking more trades, you're just adding a couple contracts on there. But the idea is that you're taking the correct trades and get in the habit of learning how to win. Get in the habit of learning how to win consistently before you try to make all the money. And here's your homework, everybody, if you've never read it. Emotion-Free Trading. I want you to read it this weekend. It'll change your perspective on what you need to do to be successful in the market. I believe that it does. I've read it 3 times now. I'll probably read it again this weekend too. But guys, I think that's it for me. I'm going to go eat Peeps and Cadbury chocolate, dye some eggs. Not really. I'm going to go to the driving range. Have a great Easter, everybody. Let me post up